Hello everyone. How's everyone doing? Hope everyone's having a nice weekend. Today is going to be week 4 of the uh, beta reviews. Can you believe that it's almost been a month since the first review? Yeah, time flies. But anyway, we're going to be reviewing the week of Monday, 13th October 2025. You can see this week we took a total of 3 positions, one break even on Wednesday, one small losing one on Thursday, and then a win on the same day on Thursday. Friday, Tuesday, and Monday, we had no trades. Um, really quickly, before we really go into the reviews, I want to look at the comic calendar. Yeah, yeah. So Monday was a bank holiday, so I could only trade after 12:20 on Tuesday, since we had Fitcher Powell speaking, and usually days that are post-holiday, if there are no news, um, tends to be slower. So since we did have news this day, um, then I would have been eligible to trade. But the only thing was it had to be after 12:20. Wednesday, there was only orange news at 8:30, so I had to be cautious because all the tentative news was on Thursday. Turns out that this news was actually cancelled and gonna come out. So Wednesday, Thursday, Friday were all no news, with Wednesday and Thursday having orange folder. So automatically, Monday no trades. Tuesday, let's take a look at Tuesday actually, very quickly. Here we are. Yeah, so we see, let me actually find a better looking chart. Okay, here. So we see we kind of trended lower throughout Asia and London, and then 9:30 took pre-market. We didn't get them all along. Then we kept accumulating up until Powell came out, and then from there, um, we kind of accumulated, and then we had another drop off later in the day. What I wanted to see this day, I wanted to see Powell manipulate lower since I was bullish today. So I wanted to see maybe this range here, the lows be taken out. I didn't want to see a new low up there just because I thought that it was necessary. The manipulation throughout Asia and London has already been done, and also the minor manipulation at 9:30 open has also been done lower. So there's no reason for price to manipulate, significantly lower than what we've already done. 9:30 also filled the stability void that we had formed on Sunday's open after we had that huge, dump that took place on Friday last week. And that was it for Tuesday. Monday is a trading day, and then here is Wednesday. Here is the day that we took the break-even trade. Let's go back. Almost. This is it. You can view it easier here. Here's Wednesday. Not that really quickly. Okay, so here's a trade. Here's the playback, and let's take a quick look. So you can see this trade, no, probably wasn't the best take. Maybe there was not maybe, probably there was a bit of ignorance that played in the role of taking this trade. But as you can see, we have a model one long that I have here. We took the market. We have this low resistance run, and then I saw this provided gap inversion here hold for a while, and I took the entry on a displacement candle that we had over here. I know when you look at that from here, it doesn't look like a displacement, but when it was playing out, it very much did, and it kind of pushed me into taking the trade. Took the trade, I partialed out when we inversed this gap here. So as you can see, this fair value gap bullish was respected, and then it was inversed and was used as resistance to bring us lower. And then as it's inversed again, I want to see it kept being used as sport, and I don't want to see it inversed again. So once it did inverse, I left Wiki. I think if we go on the review, we'll be able to get a more proper insight on what happened today. But let me see. Okay, let me start from the beginning. As you can see, 930 tech pre-market below 830. No model 2, no model or 2 though, or 1, no model 1 or 2 though. Didn't reach high in Q&A before falling back at model 1, but issue is on the RTX chart. So, can you see, yeah, here. So, as you can see, 930 opened. We ran pre-market sell side, and then we got the technical model 1, which is the cyclical manipulation. The only issue here is that we didn't fill the RTH gap, to at least consequent encroachment. So there was always space for price to wanna, keep pushing lower, even if we do provide the model 1. And that's exactly what happened. We kept pushing lower, and we filled the entire RTH gap. And then from there, we started to get a lower side. I don't want to say the mistake, but the more favorable option would have been if we tried to long within this region here. Now, I wasn't on the charts here, and I got kind of eager, and I desperately wanted a trade, and that led me to taking the trade up here. But the more favorable trade would have happened down here on a fair value gap or anything. Here's the 1 minute. As you can see, we have a retracement here, another retracement that happens here, another retracement, and this section here would have been the best area to take the model 1 long. So far in the week, my model is 1-0. Not considering the trades that I took, but considering the model by itself. So this trade here, if I was on charts during this time, I would have been able to catch along off of the model 1. And I would have, taken it probably to midnight or towards this gap if I was, aiming for a little bit higher RR. But anyway, once we reached, a point where we were past that, and I wanted to trade, but unfortunately, having missed the previous one, taking a more premium entry, especially in longer, obviously, it's always going to be lower quality. So here, here. So this is obviously more premium than the preferable trade, but I still took it because it matched a Model 2. Now, obviously, Model 2s can appear anywhere. Now we have a Model 2 here. That doesn't mean we're going to take it. This is too premium. This is just too premium. And again, I don't want to, go too much into it, but the trade before this one more discounted, is always 100 times out of 100 going to be a better option than taking the more premium one. So luckily, I got a break even on this one. As you can see, it did eventually go back down and take me out, and then it did run towards where I was hoping it would run to, which was these highs here. I mean, on this screenshot, it's not visible, but I'm pretty sure it did take those highs. I'm pretty sure. If I'm not, then sorry, yes. But this is where it's important to be on the charts, because if I had taken the long here, where it was a proper Model 1 long, then even this big retracement would have kept me in profit, and I would have been increasing the IRR. And yeah, I guess that's it for the trade. This is a simple case of I missed the more preferable entry, and I took a less preferable one, which was the inversion, or sorry, the inversion of this one, of this gap here, instead of taking the retracement down. Because I had missed this, I was looking for the next race opportunity, and this was the one provided. Granted, it was a little bit eager, and obviously, I did want to see some positive P&L throughout the week, and that led me to take a low quality trade, and we learn more. Let's go into Thursday now. Thursday was a tricky day. Let's actually, yeah, okay. Here we are. So let's take a look at the screenshot. As we can see, we have previous day high passive liquidity. Now on this day, I was leaning towards two scenarios. I was either going to be bearish or bullish, depending on what I was going to do. And what it did led me to being bearish. And here comes the mistake. As we can see, we run previous day high properly. This is my first stage manipulation. Okay, we ran it before, but this small, shallow run that happens in probably less than a minute is not gonna be inducing anyone long. You know, the purpose of liquid sweep is to induce counterparty into longs, so you're able to fill your order, and that's where the concept comes from. And this run here that happens that I counted as my first manipulation. This is a proper inducement of longs. You see, we run above the high, we displace through it, and we really convince counterparty that we're going to be going long now. So what it does is a bunch of people go long. This provides liquidity for smart money to go short, and then that's where the real move starts. Now, this is the issue with this losing trade. This is not your model 2. This is just plainly not what you'd want to see a model 2 do. This is just wrong. Okay? So I took it here because I was afraid that this trade was going to run down. So, I took a very discounted entry compared to where the proper model 2 short, or sorry, not proper, the model 2 fair value gap is provided, and even this is not a real model 2 fair value gap. And I will get into what a real model 2 fair value gap looks like. And as you can see, we enter, and immediately we're in poison drawdown, we face loss of accumulation, and we respect this gap here for a while. What happens here is, when I was impatient here, I took this, this short, impulsively. Something in the back of my head was telling me maybe you should be patient and maybe you should wait to see a model 2 form properly. And if it doesn't, then so be it, you move on. It's not the end of the world, it's just a mistrade. The funny thing is, we actually do get provided a proper model 2 short. When this run higher here and this run on this high, that's a model 2. Now, the only condition that stands between a proper model 2 short and this trade that I'm currently losing is whether we inverse this gap or not. And as you can see, once we spent lots of time, just meandering within this gap, I decided to, mitigate my loss and just watch to see if the model 2, the proper short, come up with the inversion of this gap, and that will give me a better entry, or if we just get stopped out and I mitigated my loss. So this was the best case scenario. I acted in the best way that I possibly could have. I could have also gotten greedy and said, okay, I'll keep this position on. I can weather the loss, but if this inverses, then my win would be, a lot bigger. Which is, again, at the same time, it's not true because my stop was a lot wider. Meaning my RR is less. But when you're in a very emotional headspace, it's not easy to make rational thoughts. But this is just what I was thinking at the time. So as we went on, the gap actually did end up getting inversed, and that's where I get my proper model 2 short, which was the run on this high. And this is not a high. Take off the wicks. This does not exist. This is just a retracement. However, this is a proper swing high. See, it's defined. We run it with conviction, and the body is closed above the high, and we spend some time within that area, and then we inverse it. And then once we inversed it, I took my short, 0 drawdown, and then we went and took this low as my final take profit. And it actually ended up going way beyond that. If I'll go on the full day right now, but you guys saw the trade payback that I posted. This is a perfect model 2 short. It's textbook. We took previous day high, buy for liquidity. I'm bearish. We get a model 2 short inversion, we enter 0 drawdown, and we hunt sell side. And then it's Friday, no trade. So let's go take a look at how much further the Thursday trade went down and what happened on Friday. Friday was also, there's some pretty insightful stuff with it too. And yeah, here with the play style, I wanted to see either buy side being taken out and then we take sell side, or I wanted to see sell side taken out and then we take buy side. And what happened was, scroll down the way. Yeah, here. That's precisely what happened. And as you can see, ended up going way lower than what I had anticipated. I took my take profit here, and my short was above here. So I went and took all the sell side that was created within the, pretty sure this is the past 3 days, or 2.5 days. But yeah, this was a very nice short. Perfect. And I know I handled this situation very nicely. And honestly, despite it being a impulsive and the rush trade, I'm not very proud of taking it. I handled the situation perfectly. I could have gotten greedy and I could have let this position stay on and hoped, prayed that this would be inversed instead of having the positive probabilities on my side and seeing it inversed first before entering. I'm sorry, I just got lost there for a second. But yeah, what I'm trying to say is me closing the improper model 2 short that I took out of the positivity. And you see how I was molding price into the way that I wanted it to look. Now, this is not a proper model 2 short. Looking at it from right now, with a clear head and not being emotional, this is clearly not a thing that I should be taking. This is not a short that I should be taking. However, this short will run on this high and the inversion on that. That is, genuinely and literally, by all meanings, perfect. Yeah, this was the perfect model 2 short. Anyway, let's go into Friday. Friday we had a pretty large London range compared to the rest of the, the 5 weekdays. So I had to be a little bit cautious on trading this day. And what I wanted to see was I wanted to see sell side taken out, and then I wanted to see reversal higher. Here I wanna read this paragraph here actually. Just before 9:30 open, just looking at this chart, it's clear that we have both induced shorts and longs with these pushes higher. We just took weekly low as a sweep. As you can see, this is the weekly low, and we ran that low. We swept the bodies, and we heavily rejected trends. So you can see we have displacement candles before 9:30 that rejected from taking this low. I guess what I want to pay attention for is if we want to manipulate lower at 9:30 as a form of retracement into that big hourly gap, tricking people into shorts and also allowing for mitigation of price lower to enter smart money longs just for the retail longs to be around during distribution. What I'm saying here is I want to see 9:30 push lower as a manipulation for retail to go short and for smart money to have a fair value gap filled to obviously get fair value. And that would be the retracement of the day, and we'd go higher from there. The funny thing is, I was actually on a call with one of my trader friends, and he ended up taking the short that happened as we retraced into this hourly gap. So that is exactly what I was describing. That is precisely what I was describing. I was saying I want to see price manipulate lower into this gap to trick retail into shorts, and that's what my friend got tricked into. He took a short, and he ended up exiting out of break even. And that would have been seen as a form of manipulation or retracement to me for me to go long. Unfortunately, I didn't see it the way that I wanted to see it. Obviously, we did get the push lower into the hourly fair value gap, but it did not quite take pre-market sell side and did not give me my model 1 or model 2. and from there we just extended higher. And I noted that there was this technical sweep on a very minor pre-market, but I had to be cautious this day. I couldn't just go around and cherry pick sweeps because I wanted to. This day, London trended very much, so I had to be very cautious with my trades. So I had in mind that it was going to be sort of inefficient, and yeah. But then even then, there was no model. There was no model long for me, even if we did account around these lows to be a sweep. So I just applaud yourself for being spot on with the technical analysis. As you can see, we took pre-market buy side and we did a model one short, but I was not looking to go short, so I don't consider it. But they did work out pretty nicely. Model 2 and a Model 1. Uh, this delivered all the way, very close towards the pre-market equal low sell side. And then from there we reversed higher and closed off. Now, I had to say, this pre-market equal low sell side is not going to be intact for a while. Very quickly, I actually want to open TradingView while we're still recording, and I want to take a look at the hourly chart. I want to see how that hourly gap was treated. Just let this load for a second. Right, so here we are. Look at the YM as well. The YM was pretty in sync for, say, throughout the whole week, pretty decently. But yeah, this is exactly what I was describing when I was mentioning the retracement as manipulation for retail shorts. So this whole wick here induced lots of people shorts, including my friend, and that was very crazy to see in real time. But yeah, as you can see, we ran higher. Let me take this off, and this off, and this off. But yeah, these pre-market equal lows, I don't think will stay intact for a very long time. Anyway, that was it for today's or this week's data review. It's a longer video just because we had lots of information to go over, but hope you all learned something. I hope it was insightful. Sorry. Until next week, good luck trading and be safe.